When I wanted to start investing as a beginner, I didn't know the stocks to pick. And to add to this problem, brokerages always have a risk disclaimer on the website that your capital is at risk and you can lose all the money that you've invested or some part of your money. As a beginner, of course, I was afraid of losing my money, even though I was aware of the benefit of investing, that you can double your money, triple your money, or increase your money by 2,000%. I don't know the stock that I have to pick in order for me to get that high return that I have been eyeing. Therefore, I made this video for you, which is an extract of my course, to show you on how you can pick stocks that can give you the kind of return that you want. What is contained in this video are the best ways of picking stocks based on your need and based on your expectation. And by watching this video, I will show you how I pick stocks. And even towards the end of this video, I even showed you the stocks that are in my portfolio and my reason for picking each of these stocks and why you too may consider having some of these stocks in your portfolio. As always, like this video and subscribe to my channel so that we can grow this community as much as possible. Thank you for watching this video. If you want the full explanation of the different ways of picking stocks, you can find the link of my new course in the description box of this video. But for now, without further ado, let's get started. How do I pick the stock that will be the next Netflix or the next Amazon or the next Apple? That's our focus in this course. Now the question is, what is your goal? When it comes to investing, you must have a goal. Why are you investing? You must have a goal. And we said that the purpose is to have higher return. I invested $100 this year. In 5 years' time, in a year's time, I want to get $1,000. So you must establish a goal when you want to start investing. There must be a focus. There must be a goal. And we have 3 types of investors based on their goals. And we said that we have income-oriented investors. These are investors that are interested in dividend, regular pay for investing. They are like, I invested my money not just to invest. I want to be getting regular pay for investing. And dividend is like a thank you payment for being an investor. It's like a way to appreciate you for buying shares, for buying stocks with a company. They're like, oh, you are part owner of the business. Well done. Thank you. So they pay you a dividend. There are investors that are so focused on dividends. All they want is to be getting like a regular money at the end of the month. They're like, I invested like 100K with your business. So what do I get in return? So the company is like, okay, every month we'll give you $100 for investing in our company, for being part owner of the business. And if you are interested in dividends, your focus is dividend. I want to be getting regular dividend while my stocks still grow. Your shares, you know, we have time here. Here we have price. Your stock will still grow. It will still be going up while they pay you dividend. So you're like, yes, I want to be getting regular money while I'm paid dividend. So your focus is to invest in utilities companies. Companies that are into utilities like electricity. Companies that offers electricity or water or power or gas. Things that you use on a day-to-day basis. There are companies that offer it. So they are called utilities companies. So that's the kind of company you should invest if you are interested in getting regular dividends. Also, you should invest in consumer staples. Consumer staples are things that you use on a day-to-day basis for hygiene, food, personal care, beverages, tobacco. Things that you use on a day-to-day basis to survive as a human being. So there are companies that produce such items like P&G. They produce such items that you use, food, drinks, and things that you use as a consumer. So if you are interested in getting regular dividend, invest in consumer staples companies. A good example of utility companies you should invest in is Essential Utilities and First Energy Corp. When we talk about utilities, these are examples of utility companies. When we talk about consumer staples, companies that produce items like food, beverages, tobacco, things that you use on a day-to-day basis as a normal human being. We have Target. We equally have stores like Tesco, Walmart, Darling Ingredient. They are companies that produce things that you use as a consumer every day. Also, if you are interested in dividend, you should invest in REITs. This is real estate investment trust. Real estate investment trusts are mandated by law to pay out more than 90% as dividend. So they are required to pay dividends. So they pay a lot of dividends. So if you are interested in getting regular dividend for investing, invest in real estate investment trust. An example is Park Hotels and Resort Incorporated. We also have Simon Property Group Incorporated. They pay dividend on a monthly basis or on a quarterly basis or even on a yearly basis as a way of saying thank you. It does not affect your initial investment. Dividend is just a way of saying thank you for being a shareholder with the firm. And finally, you can also invest in highly rated bonds, the AAA bonds. We have different kind of bond. The highly rated ones are AAA, AAA bonds. They are highly rated, which means that you are sure that they will pay you your money back. You are sure that they will pay you dividend. You are sure of getting your money back. You are sure that the interest they promise you, you will get it. So they are called AAA bonds. And as of now in the US, we only have 2 AAA bonds, Johnson & Johnson and Microsoft. They offer AAA bonds, which means that if they promise you they will give you 10% of your money back as dividend, as a cash back, they will actually give it to you. When they promise, they deliver on the promise. That's what we call AAA bonds. And we have Johnson & Johnson and Microsoft. Johnson & Johnson is Syntho Pharmaceutical Equipment, and you know Microsoft. This is to give you an example of income-oriented investors. If you are interested in getting regular income for investing, these are the kind of companies you should invest in. Also, some people are not interested in getting regular dividend. They just want to preserve their wealth. They're like, if I invest $1,000, I don't mind not getting a dividend, but please, I don't want to lose this money. I don't want to lose it. No matter what, I don't want to lose this money. So if you are interested in preserving your wealth, not losing your money, so which means you don't want high risk. You don't want investment that have high risk. And I told you that in investing, if the risk is high, the reward will be high. If the risk is low, the reward will be low. So wealth preservation investors are interested in low risk. So since it's low risk, the reward will be what? Will be low. It's almost similar to savings account. If you save your money in a bank, in a savings account, 100 years time, the money will still be there. But the interest will be very small. So wealth preservation investors want something that's higher than the usual savings account. Savings account is about 1%, 2%. But these ones want like a 5% return for their money or 10% return for their money every year. So they want to invest, which means they want higher return than savings account, but they don't want to lose the money no matter what. So because of that, you are advised to invest in blue chip companies. I will advise you to invest in blue chip companies. What are blue chip companies? They are companies that are well known, well established, and well capitalized. Companies that are in Dow 30, Dow Jones Industrial Average. The 30 companies that are constituent of Dow Jones Industrial Average. These are companies that are well known, well established, and well capitalized, like IBM, Walmart, JP Morgan Chase, DuPont Chemical, Coca-Cola, Pepsi, Disney, GE, McDonald's. These are companies that have been here for years, 50 years, 60 years, 100 years, and they are still standing firm. They are still standing strong. They are still there. So if they're able to survive 100 years, we are betting that they can survive the next 100 years. These are companies that are able to stand. Whether the economy is good, they are standing. Whether the economy is bad, they are standing. Coca-Cola has been there like almost for eternity. If the economy is good, Coca-Cola is there. If the economy is not good, Coca-Cola is there. People will still drink Coke, Fanta, and Sprite or other products that they make. Wealth preservation investors should invest in blue chip companies. If you want to preserve your wealth, you are like, I want to get a return about 5 to 10% every year. I don't want to lose my money. I want to preserve my wealth. The return will not be like 50% or 100%. No, the return will be something moderate, 5%, 7%, 10% every year. So you invest in blue chip companies and also in consumer staples. Consumer staples are companies I've explained earlier here. There are companies that produce what we use on a day-to-day basis. Since we use them on a day-to-day basis, we are sure that they will stand the test of time. Because you use them, I use them for bathing, for hygiene, for food, for beverage, for tobacco, and things like that. Since we use them on a day-to-day basis, we are betting that they will stand the test of time. So you can preserve your wealth, your investment, by investing in these companies. Some of them can pay you dividend. Can you see? Consumer staples is here. Consumer staples is also here. So some of them can pay you dividend while you still preserve your wealth. But the return is not something like 100% return or 200% return. Also, we have investors that are interested in growth. These investors are like, I'm not looking for dividend. Neither am I looking to necessarily preserve my wealth. As much as I don't want to lose my money, my interest is I want to get 50% return. This one is saying that I want higher return. 50% return for my money, 100% return for my money, 200% return for my money. I want to invest in the next Netflix. That you invest 1K, and when it's time for you to sell, you are selling for 49,000. Imagine the difference. You just invested 1,000 and your return, and you're taking home about $49,000. These are growth investors. They are like, I want growth. I want my money to make more money for me at a high interest rate. So I'm investing 1K. I want a 50% return. I want 1,000% return. They want massive return. So which means the risk is very high. And we said that once the risk is very high, the reward is also very high. And most times you will find them with tech companies. Netflix, if you observe here, Netflix is a tech company. It's into streaming videos and movies. Amazon is tech, online retail store. Apple is tech, online software and computers. You mostly find growth investors investing in tech companies because tech is the deal. Tech is the new thing. Tech is changing the world. We don't know where it will get to, but we know that it is starting with tech. Also, it can also be in biotech, biotechnology, pharmacy, pharmaceutical companies that use tech to power their products. We equally have alternative energy. Just as an idea for long-term investing, the choice is yours what you want to invest in. For me, my investment are in all these things and I'll invest more in them. And my reason is because they are in tech. I love tech firms. I have a passion for tech firms. I know that tech has come to stay. I am biased towards technology stocks. So for me, my portfolio is made of Apple, PayPal, Amazon and Alibaba, Shopify, Airbnb, Zoom, Tesla, airlines, and Berkshire Hathaway. So why? It's because they are in tech. I love tech firms and I know that tech has come to stay. And these companies are doing better. This is for payment. PayPal is for payment. Apple is for computer and software. Amazon and Alibaba and Shopify are for online retail. Airbnb, you know, is for hosting and accommodation. Zoom is for call, Zoom call. We also have Tesla for energy and electric cars. We have Warren Buffett study. I'm trying to maximize what Warren Buffett have done. He has done the study, so I'm investing into what he has done. Equally, airlines are doing well. More people will travel. I know COVID-19 has affected this sector, but in the future, we know that COVID-19 will not exist or will not become a serious issue. So airlines will come back to their feet. So these are companies that I, as a person, I invest in. And I'll put my investment into them because they're in tech and blockchain. ETF for long-term investment. If you want to invest in ETF for long-term investment, I've discussed a lot about S&P 500. If you're in the UK, you can also invest in FTSE 100, the 100 largest company that is publicly traded in the UK. Also, you can invest in NASDAQ 100. NASDAQ return is higher than S&P 500 return. So the way you invest in S&P, you can also invest in NASDAQ 100. The return here is higher. And if you want to invest in S&P, you can either buy it in form of VO from Vanguard, SPY from State Street, or IVV, I think from BlackRock. If you want to invest in NASDAQ 100 largest company listed on NASDAQ, you can buy Invesco QQQ ETF. It's a growth stock. The growth is high. The return is higher than S&P 500. So if you're interested in dividend, you want high dividend, you can go for Cambrai shareholder yield ETF. If you want high dividend, they offer high dividend. And also, if you are interested in blockchain like me, you love blockchain, and you know that blockchain has come to stay. In fact, blockchain will even replace technology. You can invest in Block, which is Amplify Transformation Data Sharing ETF. You can invest in it, and I've given you an example of the best ETF that you can buy. That's it, guys, on what to invest and how to invest. This is just an example of what you should invest in. The key thing I would advise in conclusion is diversification. Diversify, invest as many as possible. Diversify your portfolio. Don't forget it. Invest in stocks, in bonds, in cryptocurrency, in real estate. Diversify your portfolio. Diversification is key. Please diversify, invest in health, invest in blockchain, invest in tech. Diversify your portfolio. Thank you for taking this course. Please rate and review. Bye.